This video dives into a really cool trading indicator called the Supertrend AI clustering by LuxAlgo. It's a smart tool that blends the traditional Supertrend indicator with machine learning to help you spot trends more effectively. We're going to break down what this tool does and how you can actually use it in your trades. If you get something useful out of this video, don't forget to drop a like. Alright, to get started with this indicator, you'll need to head over to TradingView, which is the platform I'll be using here. If you haven't signed up yet, you'll find a link in the description below. After that, go ahead and pull up your favorite chart. Bitcoin on the 4-hour chart is a good one to try. Click on Indicators and then search for Supertrend AI Clustering. Look for the version created by, of course, LuxAlgo. This is the powerful Supertrend AI clustering indicator and is pretty unique. It merges K-means clustering, which is a type of machine learning, with a classic technical analysis indicator. Basically, it applies that clustering technique to the standard Supertrend, giving us improved signals. Let's walk through what's happening on your screen. Right away, you'll notice these labels popping up, telling you when a bullish or bearish trend has started. Take a closer look at those labels, you'll see numbers on them. These numbers matter a lot. They're like confidence levels, telling you how strong or trustworthy the signal is. A score of 0 is the weakest. You can think of 0 to 3 as low confidence, 4 to 6 as medium, and 7 or higher means the signal is fairly reliable. When these labels appear, you'll also see a line forming with the signal. This is your dynamic stop loss. It follows the price in the direction of the trend and helps you manage risk right from the start. But you'll also notice a second line on your chart, which is called the Adaptive Moving Average, or AMA line. This trailing AMA line works like a smart stop. Unlike the basic stop loss, it adjusts based on how things are performing. There are times when a signal might show up, but the AMA line doesn't move right away. In those cases, that AMA line can act as a broader trend filter or even a warning sign. If the price gets close to it, you might want to step back or wait for a cleaner setup. Another thing to pay attention to is the candle colors. This tool uses a gradient-style color system to help show you how strong or weak the trend is. It's super useful because it lets you feel the momentum visually, like when a strong trend starts to fade or pick back up. If you missed the first signal, this can help you find another chance to get in. There's also a dashboard right on your chart. That panel gives you insights into all the Supertrend variations it's analyzing. You'll see a cluster tab there that breaks down how different groups of Supertrend settings are doing, showing the best, average, and worst performance. There are a few columns to keep an eye on. Size tells you how many supertrends are in a cluster. Bigger sizes usually mean more reliable signals. Centroid dispersion shows how spread out the values are within a cluster. Lower dispersion means that they're more tightly grouped, which usually means more consistency. Then there's the factor column, which shows the average supertrend factor used. Higher factors gives you looser stops, while lower ones make for tighter stops. Now let's check out the settings menu, because there's some great stuff you can adjust. First up is the ATR length, that controls how quickly the indicator reacts to price changes. A smaller number makes it more responsive, while a larger one smooths things out and helps reduce noise. Next, you've got the factor range and the step size. These influence how the trailing stop behaves. The factor sets how far the stop is from the price. When you enter a range, the tool will try out different values and show you the results in those dashboard clusters. The step size fine-tunes that process. Smaller steps gives more detailed feedback. Another important one is performance memory. This tells the indicator how much to weigh recent market behavior compared to older trends. A higher memory setting will react faster to recent changes, while a lower one will lean more on long-term patterns. Then there's the cluster drop-down. This lets you choose whether the final signal comes from the best, average, or even worse performing clusters. Picking the worst might sound strange, but it could actually help more cautious traders by filtering out risky signals. Finally, there are settings like maximum iteration steps and how many historical bars to analyze. Increasing these can make the indicator dig deeper for more refined clusters and more detailed analysis, although it might take a little longer to load. You'll want to experiment and find what feels right for your setup. Personally, I like to try the default settings first, just to see how they perform, and then tweak from there. It's great to know you've got the flexibility to dial things in. Now let's talk about how to actually trade with this indicator. Just because a signal shows up with a high confidence score doesn't mean you should act on it automatically. Like any tool, it works best when you use it alongside your own technical analysis, looking at price action, patterns, and confirmation signals. But don't go anywhere, because just before the end of the video, I will share with you not only the best ones, but also several approaches and ways to turn any trading strategy, including this one, into a bot with others, all for free, so it does a job for you while you're not around. Now, for a bullish setup, you'll want to see a buy label with a confidence score of 7 or more. Ideally, you'd also see a price breaking out of range or showing a strong upward movement, maybe with candles shifting into a stronger bullish gradient. The initial stop loss can be placed using that trailing stop line. Also, keep an eye out on the AMA line. If the price is bouncing off it like support, that's a good sign. You could wait for a slight pullback towards the trailing stop or the AMA before jumping in, especially if the signal came a little late. Bearish setups are basically the opposite. Watch for a sell label with a solid confidence score and see if the price is breaking down from a range or showing a strong downward momentum. The candle gradient should reflect that increasing bearish energy. Place your stop loss just above the signal and watch the AMA line. If it's acting as a resistance, that confirms the trend. Again, you might wait for a pullback to one of those lines before entering short. Remember, those confidence scores are there for a reason. A signal with a low rating like 1 or 2 could mean the trend is weak or that the market might reverse. Be extra cautious in those situations, or just wait for a stronger signal that lines up with your analysis. For example, if the market seems choppy or stuck in a range and you get a weak signal, it might be best to sit tight and wait until a stronger signal appears during a breakout. Even the high-rated signals can sometimes fail. You might get a strong buy or sell signal, only to see another one come up soon after. This is why using your own chart skills like identifying consolidation zones and watching for clean breakouts is so important. And that's why you should watch this video until the end, because believe me, you will be surprised with what I've got up my sleeve for you guys. To sum it up, the Supertrend AI clustering indicator from LuxAlgo is a powerful tool. It takes a tried and true concept like the Supertrend and gives it a major upgrade with cadence clustering, helping you get smarter, more adaptive signals. Between the confidence scores, the smart trailing stops, and the adaptive moving average, and of course the gradient candles, you've got everything you need to better understand trends. spot potential trade entries, and manage your risk more effectively. That's it. None of this financial advice. Everything I'm showing you here is based purely on technical indicators. When it comes to real trades, you should always combine this with your own chart analysis, fundamentals, or whatever strategy you trust. And as I promised you earlier, make sure to watch the recommended playlist on your screen to watch different approaches to make any trading strategy, including this one, into a bot with alerts and the other recommended videos on your screen. Believe me, you will love them. There's always risk involved in trading, and you should never use money you're not prepared to lose. If you learned something useful today, hit that like button, or better yet, subscribe to the channel so you don't miss out on future videos like this. Thanks for watching, and I'll catch you in the next one.